If you do any form of low to medium time frame trading, then the relationship between time and price matters more than you might understand. See, different markets do different things at different times of day. And there are actually some repeatable characteristics that we can see and use to our advantage in trading when we understand them. So in this class, I'm going to teach you all about the relationship between time and price, different trading sessions, and how the characteristics of different times of day can provide you with high probability, high reward setups. So with that out of the way, let's get to the learning. The first thing that you need to know is that there are three core trading sessions. We have the Asia Pacific session, the London session, and the New York session. These sessions are simply times of day where certain assets and certain parts of the world are more active in their trading. So here we can see the different examples on the screen. Through Asia session, we are going to have pairs like AUD, NZD, and JPY as the most active pairs. Through London, we will have European focused pairs like Euro USD, GBP USD, pretty much anything Euro or Pound focused, as well as the Swiss franc and other European currencies. And then New York, this theme continues, and we start to see more volume in assets like USD CAD and USD JPY, dollar focused pairs. So generally, through London and New York, major and minor pairs are most active, and through Asia, anything Asia or Pacific focused will be more active, for example, AUD NZD or NZD JPY. Now, the sessions and ranges that we're going to look at today differ very slightly from the actual trading sessions. So what I do is actually use a high volume area within the larger session. So Asia session does extend a little bit longer than I'm going to mark out, but for the lessons that I'm going to show you and for the characteristics that happen very, very often in the market, these are the timings. And this is in UK timing, which right now is British summertime. It will also be GMT in the kind of winter time when summer ends. So 1 to 7 a.m. UK time is the time that I mark out for Asia. 8 to 12 p.m. is London, and 1 p.m. to 5 p.m. is New York session. As I say, the real sessions do extend a little bit longer than this, but we can see these sessions that I've marked and that I'm going to teach you with today as kind of the high volume timings for the different ranges and the ones that the characteristics work really well alongside. Now, it's also worth noting the things that I'm going to teach you today are heavily focused around London and New York. So you need to be trading major pairs. You shouldn't really be trading exotic pairs with the systems I'm about to show you, because if you're trading pairs like AUD JPY or AUD NZD, these markets are going to have more volume in Asia. So Euro USD, GBP USD, Euro GBP, pairs like this, that's what we're focusing on today. Okay, so from this example, you can actually see some of the session characteristics in action. So let's break them down for you now. Through Asia session, when we're looking at pairs like Euro USD, GBP USD, and Euro GBP, we are going to see a consolidation. So we're going to see a sideways range where there's not a whole lot happening at all. Then through London session, we have a London push. And into New York, we oftentimes get a reversal. So we have Asia consolidation, London push, New York reversal. These are the textbook characteristics that in an ideal world we would see happen perfectly like this every day. Now, obviously, in reality, there's a lot more to the markets than just reacting to sessions. So these patterns are not going to happen every single day. And sometimes they will happen, but they won't be clean enough to actually trade. But these characteristics happen often enough to become very useful if you understand them, and they can have a meaningful impact on your trading. So if you stick with me through the lessons today, the information you take away will definitely help you in your trading in some way. So now let's go over to the real charts. I'll show you some examples so you can see that it does consistently work, and then I'll actually explain why these characteristics happen and how you can start to take advantage of them. Okay, so now you can see some real examples of the sessions on the charts. This is Asia, this is London, and this is New York. So for reference, Asia session is going to be marked blue, London is green, and New York is grey for the remainder of this video. Now what we can see here is 2 days worth of price action, and you can see the characteristics playing out pretty much exactly how I just covered them. We have the Asia consolidation, we have the London push from this low to this high, and then leading into the beginning of New York session, we have that New York reversal. If we head on to the next day, we once again see Asia consolidation, London push, and then into New York, we get a reversal. So these characteristics do happen a lot, and I'm not just cherry picking these 2 days. If we go here, Asia consolidation, London push, which is this push to the downside, and then New York reversal, which is this lead back to the upside. As you can see, we started it here, but it really got moving in New York. The day before is a day that it didn't happen, but if we move a day previous to that, we have the Asia range, which is rather large this day, but we still get that characteristic London push and New York reversal. So don't worry, I'm not just cherry picking the setups here. These are actual characteristics that will help you in your trading. So the first thing I want to do is explain each of the sessions, explain the characteristics for each session, and give you an insight into why they actually do what they do, because it's good to have this information so you've got clarity and confidence behind your trading. So the first thing we're going to look at is going to be the Asia consolidation. Now we can see that most days the Asia range is just a small area, right? We just have this small kind of confined range where the market may have made some movements, but it didn't really get anywhere between the open and close of the session. You can see we opened here, we pushed up to here, but we ended up closing pretty much back where we started. Now, why exactly does this happen? Why do we fail to make significant movements throughout Asia range when we're looking at pairs like Euro USD, GBP USD, and Euro GBP? Well, let's think about why markets move. Markets move due to institutional level of buying or selling. So huge quantities of buying will drive a market up because the demand pushes the markets up, and huge amounts of selling will bring the market down because new supply enters the market, demand isn't there, prices have to lower in order for people to want to buy again. Now, if we know that the orders that move the market are institutional, well, that means that institutional traders are, of course, going to be trading at certain times of day. Institutional traders are not up at 1 a.m. executing their trades in mass, right? The majority of trading is going to take place in terms of transacting and getting into or out of positions is going to take place at some point throughout that native currency's day. So when we're looking at Euro USD, GBP USD, Euro GBP, these are Eurozone, UK, and US area currencies, which means that the most volume for these currencies is going to be taking place through London and New York, not during Asia. Now, if we were to look at AUD, NZD, or JPY, there would indeed be more volume happening throughout Asia, because in the Asia Pacific session, the currencies that are being traded the most are generally going to be Asia and Pacific native currencies. So when we're looking at Europe and US based currencies, they're just not going to move too much through Asia because the trading is not there in mass. So that is why we get the Asia range. Now, the London session, obviously coming with the London push that we get, the big, large, high volume movement, why does this happen? Well, that's because, obviously, once again, looking at Euro, US, UK based currencies, in London session, we are going to see a lot of volume for these currencies pick up. So if we're trading major pairs that are focused around these countries and the currencies these countries use, then when those institutional traders are starting the day, we are going to see huge pushes of volume. Now think about London session. Around 8 a.m., what are people doing at 8 a.m.? Well, institutional salary traders are starting work. Whether they're just running their systems, whether they're actually manually trading, transactions are happening for these currencies in mass at this time. So we are going to see large movements in one direction or the other during London session for US, UK, and Europe based currencies. So really, it just comes down to volume. In Asia, there just isn't volume for the currencies that we're looking at. So there's not going to be a big directional move. In London, however, there is going to be institutional volume trading the currencies that we're looking at. So we get a big, nice push, and that's actually what we can start to take advantage of. Now, moving over to New York session, why does this happen then? Well, it's pretty much the same thing. In New York session, we are getting a new push of volume from institutional traders in the US. So this is going to be start of day for the USA. This is when traders are starting, salaried traders are beginning in institutional positions or whatever. They're starting their trading for the day, they're running their systems, they're transacting, and that is actually going to lead to a new directional move. Now, in terms of why it's a reversal, well, my best guess there would be, which is just my theory, would be during London, when we get to the end of the primary phase of London session, the transacting that's taking place in the morning is simply slowing down. So obviously, if we get new transactions and new executions from traders in the US at the start of New York session, well, that slowdown in volume at the end of London could lead into a new pickup of volume in the opposite direction as more transactions are being placed from the US market. So to break it all down simply, in Asia, we just don't have enough volume for US, UK, and Europe-based currencies. In London, we get that institutional push of volume, and then in New York, we get another institutional push of volume. So really, it's just all volume focused, and it just comes down to which currencies are being traded at which times of day by the relevant institutional participants. Obviously, you're here to learn how the relationship between time and price can help you. So now let's actually run through each of these sessions and the characteristics and how you can use them to your advantage. Now, Asia being the first is not really going to be a session that we trade. First of all, because if you're trading London or New York, you're probably going to be asleep through Asia session. Second of all, because we know there's not going to be a lot of volume happening in this session for us to trade anyway. So the movements are really not that great. Now, there is one interesting thing that happens around Asia session, however, and that is liquidity forms above the high and below the low. Now, what we see a lot of the time is at the start of a day into London session, the market will sweep the high and the low of the Asia range. So we actually liquidate the high and the low. If you know the high and the low is likely to be swept, then you could look for opportunities to sell once the high has been swept, targeting the low, or to buy once the low has been swept, targeting the high. Because if it's a common pattern that the market liquidates both sides of the range, well, then you can start to build a system around that. And it only has to be right 40 to 50% of the time in order for you to actually make a lot of money. So Asia isn't really an active trading session for us, but the liquidity that forms around the highs and the lows can definitely be useful for identifying potential opportunities for trading towards either side of the liquidity, or second of all, just avoiding getting into bad trades if you understand the liquidity is likely to be swept. Now, one of the more interesting sessions is for sure going to be London session. If we know that we are going to get this London push much of the time, then we want to look for opportunities to trade with the momentum here. We want to make sure we are looking to catch trades early in the session. And this is the big pointer. If you trade at the start of a session when the volume is coming in, you are likely to get a high probability move. And you're also going to get a fast move that can bring you profits very quickly. Take a look at this. If we traded during Asia, we're going to be waiting a very, very, very long time just to get stopped out in the end. But if we trade in London, then we're not going to be waiting too long for this trade to run to a massive profit because we are catching that start of the institutional volume and we are able to take the trade with it. Now, I'm not saying you should randomly buy or sell at the start of London session, but you should definitely use the timing to your advantage. And if you identify a setup that looks good, entering early in London session can definitely be a good idea because it will allow you to catch that high volume movement that occurs. So now let's take a look at an example using the London push and what we learned around the Asia session just to actually identify a potential setup example. So here we have a 30-minute demand zone. The market has traded into the 30-minute demand zone, and we've started to have a rejection of prices at the start of London session. So if we were going to be looking at this from the perspective of a low time frame trader, we could see, well, first of all, we have the Asia high up here. We have the Asia low down here. The liquidity below Asia has been swept. We've traded into a high time frame demand zone. So now, knowing that the London push is likely to occur, we could pair these confluences. We have a demand zone, which is maintaining price. We have a sweep of the liquidity under this low, and we still have the liquidity up here, which is open to potentially being retested. So we could look for an opportunity to catch the London push from this demand and trade higher towards the liquidity up here, and then obviously extending further to targets if you wanted to. So as an example, here when we start to see the momentum pick up, we could jump into an opportunity and look to trade that towards the Asia high to see if we get that sweep of liquidity. And here we've caught the high volume movement of the London push. We used momentum that we can see at the start of the push to find a position upon a closure here over the previous low. Then we get into a trade and we run the market all the way up and we can use liquidity as a clear target because we know that this is likely to be liquidated as well. So by knowing that the London push is likely to occur, we can use other confluences as the catalyst behind trades, but then we can look to enter with the momentum in order to catch the movement. And obviously, in this example, we were able to pair what we know about the Asia range, which is that there's liquidity either side, to use it as a clear target. So that's just one example of how you can use that London push to your advantage. Now let's go and take a look at New York. So once again, the last thing we would want to do in New York session is just directly sell because we think there's going to be a reversal. We would need to see some reasoning for the trade to actually happen. But if the market does confirm that it is reversing in the short term, we can then take advantage of the understanding that generally New York is going to formulate those reversals. So in this example, following on from the previous London push trade, now we know the liquidity above the Asia high has been swept. So after a sweep of liquidity, this is where those orders and transactions come in that generally will form a potential reversal in the market. Now we can then see, after pushing to the upside and forming this high, the market has come down and it's broken a few points of structure. So we have two previous lows broken with this strong high momentum down move. Now this, indicating a reversal, could then potentially lead us into that New York reversal that we expect to see. So what we could do is use open supply as entry for a trade, put our stops over the high to be safe, and then we could look to target meaningful areas. So I can see down here we have this demand zone which is imbalanced. So for me, in my strategy of supply and demand and market efficiency, I'd look to use that as a target. So then we can look to take advantage of that reversal trade because we understand that these reversals are likely to follow through in New York. And while we didn't just use that on its own for a trade, seeing the confirmation into the start of New York session provides us with kind of a high probability and high confidence setup to actually trade lower. And as you can see, we would have got that fill on that position with an entry from supply and a target down at the open demand. So for London, we used higher time frame confluence of demand, the lower time frame confluence of a sweep of liquidity, and then the start of the momentum to execute and trade through the London push. And then after the sweep of the high, we used our understanding of the potential New York reversal to execute into a new position to actually follow the reversal through after the market confirmed a change in the trend structure. So obviously now, as you can see, there's a lot of merit to understanding these session characteristics. The liquidity that forms around Asia can be incredibly valuable for identifying potential areas of reversal and also good for helping us to define targets, and understanding that London is going to bring a push of volume can be a great catalyst for us to get into positions if other confluences agree with that trade. And then if we do start to see reversals confirm into the start of New York, we can trade through those as well, knowing that this characteristic happens quite a lot of the time. So to run over this one more time, when you are considering session characteristics, we are looking for liquidity around Asia. We are looking to find confluences and reasons for executions into London session that can allow us to catch the London push. And then in that crossover timing from London to New York, we are generally going to be looking to shift the bias and look for reversal opportunities. No, we do not need to just close all of our trades and bank on a reversal. But if we do start to see reversal confirmations coming, then we will have opportunity to shift the direction from what we took in London into what we are looking for in New York. Now, if you are a pure low time frame trader, you can build entire systems around this London push and New York reversal, as well as the liquidity around Asia. If you already have a system though, and you don't want to change it, the key focus should just be considering these session timings. If you can pair up the timing with the trades that you take, and you can look to get into trades at the start of London or the start of New York, then you are going to be catching the high volume, which will allow you to make faster, bigger profits with more probability because we know that these characteristics are likely to follow through a lot of the time. By just looking for ways to time your trades well with the market sessions, you'll improve your results pretty much immediately. Now, the examples I showed you today are not the only way to trade through London and through New York. Of course, you can trade them with the confluences that you use, but it's just worth knowing that these movements do happen, and they happen a lot. So make sure in your trading, you are working with the momentum that I've explained to you today, and also considering that liquidity factor around the Asia session. If you want to learn the strategies that allowed me to catch this gold trade today and have allowed my students to achieve over $19 million in funding and nearly $6 million in profits between them, then I will take you every step of the way through your learning journey from where you are now to getting funded and achieving your first payouts. Hit the link in the description, you can learn more about how I will help you do that. If you enjoyed the video, drop a like and make sure you subscribe because I post these videos every week and there's a lot of value that you can take from them. So with that said, that is all from me. Have a good day. Thank you for watching. I'll see you in the next video.